just get started on this last video, video number 6. There are actually going to end up being 8 videos in this Introduction to Options video series. I have the teaser, and then I have a bonus video, and then I have these 6 videos. So we're just going to finish this up, video number 6. Again, Ken Creager from Black Swan Financial Advisors and the Community for Possibilities Achieved. So just want to wrap this up. Again, remember, all my videos are for educational purposes only. Okay? They're to help educate and help you to learn on a little bit about options. And then again, like I said, I'm putting together a premium advanced options video course, which basically will be these 8 videos, these introductory videos. But then we're going to go into some advanced topics, go into a lot more detail, and actually do trades. I'll show you, I'll record different trades and how to actually execute different trades and do those strategies. And you'll be able to get that course for a relatively cheap investment. And I guarantee you it will pay for itself within the first trade. If it helps you avoid, we're going to talk about this right now, options trading mistakes to avoid, and being able to have some videos to watch where I'm going to be executing real trades and be able to talk you through it and be able to show you, things to watch and keep track of and to pay attention to, because it's a simple mistake could easily cost you thousands of dollars. Okay, so my advanced video course is, it's going to be way cheaper than that, and it will pay for itself very quickly. So anyway, let's talk about these tips for a better trading experience and using options. So just talk about some of these things. I mentioned some of them over time in the different videos, but the main thing is that in all your investing, you need to have a solid trading plan. You need to know what your asset allocation is going to be. You need to know how big your positions are going to be. You need to think about the volatility of the different positions that you're going to go into, and maybe adjust your position size based on volatility. But you need a plan, okay? And you have to remember that options use leverage. So that can actually be kind of scary, and you've heard about, especially over the last 2 years after COVID, everybody getting Robinhood, and they're doing options and they're trading, and man, they get $100,000. And then I read some article about how somebody went $100 and something thousand in the hole, negative, right? Because that happens because of options, you're using leverage. So you need to have a solid trading plan and the strategies for managing risk and protecting your portfolio. And one of the biggest things, I fight this all the time actually, I love to trade. Okay? It's almost like me and my brother, a friend that we've had kind of an investment club going for a while, and probably more than 10 years. And we do trades. We've tried all different kinds of strategies. We do trades. And I've even kind of tried the day trading thing for a while, different strategies there. But it's kind of like when I go fishing. Fishing and trading, they're the same. When I go fishing, I like to use flies and spinners and lures because I like to be moving. I like to be active. Throw it out there, get a hit, pull the fish in. The last thing, I hate bait fishing. Okay? I hate putting the bait on the hook and throwing it out there and waiting and waiting and waiting sometimes for hours for the fish. Okay? I like to go to the fish. Well, that's the way I trade. It's crazy. You can actually become addicted to it, I think, in some ways, like gaming or whatever, especially when you're winning, right? You do some really good trades and you make some good money. I remember one time for a little while I was doing Forex currency trades, and I was doing futures. If you think options are dangerous because of leverage, think about futures are crazy leverage, right? So you have to be careful and don't overtrade and don't make impulsive decisions, right? You're seeing the movement of a stock or an investment or whatever. Before you do a trade, you need to understand why you're doing a trade, and you need to understand when you're going to get out, okay? So avoid overtrading and making impulsive decisions, and stick with your strategy. Now, you might adjust your strategy and change it, because you should be constantly evaluating how things are working. But don't make like impulsive decisions. Analyze how your trades are working out or not working out. Adjust your strategy and then implement it, right? But you need to have discipline and patience, right, to be a successful trader, even an options trader, but any kind of trader. Avoid trading based on emotions. And, we have a lot of biases built in, right? We like certain things or we don't like certain things. And maybe trying to understand what your biases are and make adjustments so that you try to avoid that. How to analyze your trades and learn from your mistakes. Like I said, Greg and I, my brother, we tried this strategy using put options. We tried it for a month or two. The very worst time, it was kind of a bullish strategy, and we tried it like in October of last year, right at the market bottom. And that bullish strategy just blew up, and I made a mistake of basically the strategy was that particular strategy. Since I didn't have a huge account that I was trying it in, I invested in some very expensive stocks. And remember, options prices are based on stock prices. So if you're doing a trade on a $500 stock, it's really easy to lose a few $1,000s in just a moment, versus if you were doing a trade in a $50 stock, okay? Literally one options contract of a $500, $600 stock, your exposure there is pretty high. Think about it. You have a $500 stock. You have one options contract. You have $50,000 of capital at risk or potentially tied up in that trade. $50,000. Okay, well, technically you could actually trade that in like a $50,000 account, but if that trade goes against you, you can be in trouble really quick. So, Greg, my brother and I, we ended up having to scramble because the market just went way negative on us. And like I said, that was a bullish strategy. So that's another thing. You need to pick a strategy for kind of what's going on in the market, right? And then you need to have realistic expectations and don't get too caught up in short-term gains. Making a couple of percent every month, making 12 to 15% a year, that's exceptionally good returns. Think about the average stock market return over, the years is like 6.5% or so over the last 40 or 50 years. Some of those years you're down 40 and some you're up 40. But You can use, remember what options were designed for. Options were designed to help mitigate and manage risk. Okay. So a very simple example of that is, they're actually futures, but an option, this is kind of what you're a farmer and you are going to plant corn, and your corn is going to cost a certain amount of money. You got to buy the seed, you got to farm it, then you're going to have to harvest it and everything. And a good example is, so you've got this investment in this corn, and say you need to get $20 a bushel. I mean, this is all made up, in order for you to make a decent profit. And so farmers do this all the time, actually, in the futures market. But there's actually options on futures, if you can believe that. So what they do is, maybe they buy a put option on a futures contract for corn, to be able to sell it for $20 a bushel, no matter what happens to the price. And what they're doing is they're giving up a little bit of their profit so that they can do that. And what that does is, if prices are more than $20 a bushel, then their insurance, it won't give them anything, right? I mean, that's the cost of insurance, but they can sell it for $25 a bushel, and they have X number of bushels, then they can do well. But if the price goes down to $15 or $10 a bushel, their option gives them the right to sell it for $20. Okay, so you can see how you can use it to manage risk. But I'm going to close this with just one really simple thing. You need to go slow. You need to be careful. Simple mistakes can cost you. Okay, so the thing with the options is kind of interesting, is like with a stock, I guess if you sell stock short, you have a similar kind of thing. But usually you just buy or sell a stock, right? You buy to open and you sell it to close. But remember, as for an option, you can be the buyer or the seller. And the thing is you need to understand the terminology and how the trade works. And this is why I highly recommend that when my advanced options video course is out, that you go ahead and make that minimal investment. It's not going to be very much, and you'll have videos to watch so you can see how trades are made. You can watch them over and over again. You can watch it and pause and everything while you're doing the same thing yourself on whatever positions you want to do it on. But I wish that when I first started learning options and stuff, that I would have had that, because I made some mistakes. Like I said, even just as recently as last year, I knew what I was doing, but I didn't do my position sizing properly. And I didn't lose a lot of money, but I lost more than I wanted to, more than I planned. So anyway, you have to remember that if you're going to open a position, remember, if you're a buyer of an option, you're going to buy to open. So if you're going to buy a put or buy a call, you're going to buy to open. And when that trade executes, then you'll own that put or that call. On the other hand, if you're going to sell the call, like we talked about doing covered calls, you're going to sell to open. So you're opening the trade, okay? So those are two ways to get into a trade. So the buy to open would be you buy the call or the put outright, and the sell to open is you're selling it, the call or the put, to get into the trade. Now, to close the trade, you have to close it, okay? And remember, most options expire worthless. So I almost never exercise an option. That's what it's called when, like, if you bought a put, you have a right to sell the 100 shares at a certain price. Well, in order to do that, you have to actually own those shares. So if I owned 100 shares of Microsoft and I sold a put and I don't know, price is like 270 or something today. Say I had the right to sell it for 270 and it went down to 200. Well, then I could exercise the option and it would take my 100 shares and sell them for 275. Okay. What most people do, and what I do most of the time, is the option itself is worth really close to what you would make if you exercise the option. As long as you get out of the trade or you close the trade before it expires. Remember, options have dates. They expire. Okay? And in fact, that can work for you or against you. If you're the buyer of an option, it could work against you. If you're the seller of the option, time is your buddy, and because that value curve goes off so steeply. So if you've sold to get into a position, you sold a put or a call, you're going to buy it back to close it out. Remember, you sold it to somebody, so now you need to buy it back, and you would keep the profit, the difference, okay? So, and if you bought it, you bought a put or a call, then you would need to sell to close the trade. So that's just a simple example, because if you do this backwards, okay, for example, say you thought you were going to sell a call on a position and you get something wrong and you end up selling a naked call. Your exposure to that actually could be unlimited. So again, be careful, do simple things, start small. It should only be part of your strategy anyway. You shouldn't, I would never recommend everything you do is options. I do options to get into positions. Like I want to buy a stock, and if I was going to buy 100 shares or more, I would sell a put to get into it. So I get a discount. So anyway, again, Ken Creager from Black Swan Financial Advisors. Remember, the video is for educational purposes only. And here's my website. Subscribe to my YouTube channel. I hope you found this video series valuable, and look for my advanced video series for just a trivial price compared to the value that you're going to get out of it. It will be available hopefully here in a couple of weeks as I'm working on it. I need to work on the videos where I'm doing the actual trades, and I want to be able to do that over time a little bit, so you can kind of see me getting in and out of trades. So anyway, thanks again, Ken Creager. Look forward, watch my videos.